Hello everyone, welcome to the Financial Information channel. My name is Marvin. In this video I'm going to give you my top 5 stocks that you can buy. You can put them on the watch list or you can trade the stocks. The decision is gonna be up to you. And remember to do additional research when you're buying stocks. Now, first thing that I'm gonna do is I'm gonna let you know how I did during the September video. I'm going to mention the stocks that I mentioned during September, and the first one is Adamas Pharmaceutical, and the company went up 1.05% during September. And the second company that I mentioned in that video was Match Group, and that company went up 6.57%. And the third company that I mentioned was Adobe System. The company actually moved down during the month. It went down 3.87% during September. And the fourth company that I mentioned in that video was Apple, and Apple moved down 6.02%. And the number one company that I mentioned during the September video was IPG Photonics. The company moved up 5.28%. And with that said, I'm gonna start with the stocks that I'm gonna mention for October. And the number 5 stock that I'm gonna mention is gonna be Goldman Sachs. And Goldman Sachs, what they do is they do a lot of investments with the people money. So if you need help, they're gonna be able to invest your money into the stock market so they can make you more money. It is usually ranked as the number 1 investment bank in the United States. And to be honest, the company had moved down during the last 2 quarters. The thing is, you need a lot of volatility in the stock market so the stock price can move up. And that's what we've been getting during the last few months. There has been a lot of volatility in the stock market, and that is gonna move the stock higher. At this moment, Goldman Sachs is negative for the year. It is negative 0.94%. But now let's take a look at the stock information. At this moment, the price is $237 per share. The beta is around 1.44. The PE ratio is really low at this moment, which you expect in a financial. The PE is about 12.44. Now let's take a look at the forward PE, and the forward PE is a little bit lower. It's about 11.90 for next year. The profit margin is around 26, and the gross margin is around 28. And one of the things that the company has struggled during the last few quarters is the revenue growth. It is negative 0.60% during the revenue growth, and it is barely positive on the earning growth with 0.50%. They have around 732 billions in cash and about 404 billions in debt. So actually have a good balance sheet. And the short ratio is really low with 1.16%. So even though the company is negative at this moment, I think during the next few months, the company is gonna recover and be positive for the remainder of 2017. And I do think that this company is gonna have a great 2018. And now for the number 4 company during the month of October is gonna be Broadcom. And Broadcom is in the semiconductor sector, which has done really well in 2017. And one of the big things is that they're involved in data, either wire or wireless. They're really huge into the cloud business, social media, video streaming, and the wireless into the LTE connections. In addition, they have a huge percentage into the enterprise storage, and that is what makes this company appealing, because in the next few years we're gonna see a lot of 5G connections, and this company is heavily involved into the 5G. Nowadays, data consumption has become one of the best revenues for companies, and Broadcom for the year has gone up only 37%. But now let's take a look at the stock information, and as you see in the screen, the stock price is around 242. The beta is around 0.96. However, the PE ratio, which is the price to earnings, is a little bit high. The price to earnings is a little bit high with around 184, but the forward PE is very appealing. It has a forward PE only 13. I usually pay attention more to the forward PE than the current PE. And in the profit margin, you can see that it's only 3%, and the operating margin is only 16%. And they are doing way better now in the income statement. The quarterly revenue growth is around 17%. Now, one of the weaknesses is the balance sheet. It has around 5 billion in cash and around 13 billion in debt. And one of the things that kind of surprised me, the short ratio is only 0.90%. And one of the things that people might say that their business depends too much in Apple. And I think Broadcom is a little bit more diversified than people give them credit for. And the number 3 company is gonna be Nvidia. And Nvidia is another semiconductor company that I actually had in my account, but I sold all my position. I ended up getting an AMD for Nvidia, which at this moment has been a mistake on my part. Now Nvidia, they do a lot of graphic cards, and they are involved into the gaming, and that's actually what drives a lot of the revenue. The Nintendo Switch has the Nvidia graphic cards, and that console has been selling really well this year. And they have a huge portion into the AI, which is the artificial intelligence. On September 26, the company had a great deal with the 3 biggest companies in China. Nvidia is gonna provide the AI chips to Baidu, Tencent, and Alibaba. In addition, they provide the chips to the Tesla cars. And Nvidia has gone up around 67% in 2017. But now let's take a look at the stock price. And the stock price at this moment is 178. The beta is around 1.55 and the P ratio is around 51. And the forward P doesn't get cheaper, it's gonna be around 45. The profit margin is around 27% and the gross margin is around 31%. But what I like about this company, the company has been growing like crazy during the last few quarters. The quarterly revenue growth is around 56% and the quarterly earning growth is 123%. In addition, they have a good balance sheet. They have around 5.88 billion in cash and around 2.08 billion in debt. And the company has a really short ratio with 3.45%. The company is making a lot of money every quarter. One of the weaknesses could be the price to earning. It's a little bit high in my opinion. But this is a growth stock and I think it's gonna continue growing during the next few months. Now for the number 2 stock is gonna be Alphabet. And Alphabet is gonna have an event on October 4th where they're gonna announce the new smartphones. So that's one of the strengths that the company is getting more into hardware. In addition, one of the biggest opportunities, they are developing a self-driving car. And as you have heard in the news, Google and Uber are in a legal battle. The thing is that Alphabet is saying that Uber stole one of its patents from the self-driving car. Besides getting a new phone and the self-driving car, Google is the #1 advertiser in the whole world. Since we're moving to more data consumption, videos is gonna take over during the next few decades. And Alphabet for the year has only gone up 24%. And the stock price is around 959 per share. Now let's take a look at the beta. And the beta is 0.98. And the P ratio is around 34 at this moment. But the forward P, which matters to me, is only 23. They have a profit margin of around 19% and the gross margin of around 26%. And the quarterly revenue growth is around 21%, which is actually good. Now Alphabet has one of the best balance sheets. It has around 91 billion in cash and almost 4 billion in debt. So they can easily pay that debt and still have a lot of cash. And the short ratio is 0%. Now don't be fooled by the high share price. The company is really good. Alphabet is probably gonna have the share price around 1,000 in the next few months. And the #1 company is gonna be Tencent. Now Tencent is located in China, and the thing about China that makes her appealing is that around only 52% are internet users. So that is a growing opportunity for Tencent. Now Tencent has the #1 game with League of Legends. That game was one of the reasons why esports is huge in China. In addition, they acquired Supercell. I believe that company is from Europe. That company created Clash of Clans, Clash Royale, and Boom Beach, which are huge games in the mobile space. And one of the things about Tencent is that it has around 70% of the music streaming market in China. With the internet users growing more in China, that is going to become really huge in the next few years. Now Tencent has invested in different companies. It owns around 5% of the Activision Blizzard company. And it depends if you like Tesla or you don't like Tesla, because Tencent has around 5% stake in that company. Now let's take a look at the stock price. And as you can see on the screen, is $43.92. The beta is around 0.84 and the PE ratio is 51. And the company does not have the calculated forward PE. It has a high profit margin of around 28% and the operating margin is around 31%. The quarterly revenue growth is really good at 58% and the company has a really quarterly earning growth with around 69%. It has a positive balance sheet with around 20 billion in cash and around 17 billion in debt. And the short ratio is not calculated for this company. Now Tencent is one of the 3 biggest giants in China that I mentioned earlier in the video. This company is going to continue growing during the next few years. And that is going to be everything for the video. Please let me know in the comment sections if you are investing or if you are planning to invest in any of the companies mentioned in this video. And for me, the only company that I have shares is Alphabet. Now, I'm gonna thank you once again for watching the video. Don't forget to subscribe to the Financial Information channel. I bring videos about the stock market, personal finance, and how to make money online. Have an excellent day and take care, my friends.